Let's check in on the markets picture over in Kenya. Now recapping, of course, first on trade as it played out in yesterday's session. Shares in Kenya falling to a 3-year low, with the NSE 20 share index dropping 0.3% to 4,463 points, a level that was last touched on February the 4th when it closed at 4,450.7 points. Kenya Power, the country's sole electricity distributor, dropped 2.8% in yesterday's session to the 17 shilling 05 mark as investors await clarity over a proposed increase of electricity tariffs. In the meantime, Kenya's second largest retailer, Uchumi, fell 1.3% to 19 shillings 35. That after it posted a 35% drop in its first half pre-tax profit. On the currency front, the Kenyan shilling edged up against the dollar yesterday after the central bank further reduced the volume of funds washing around the money markets in the session. We had the bank mopping up 15 billion shillings, received 16.6 billion shillings in bids, and accepted 16 billion shillings at a weighted average rate of 9.4%. Bank of Africa saying in a daily market note that demand for dollars from importers had also dwindled ahead of next week's national election as investors trade cautiously. So that the broad market performance in yesterday's session over on the East Coast. Let's get into some analysis of that market now with Samuel Gishohi. He's head of business development at NIC Securities. Samuel, thanks so much for joining us this morning. So we've had a further retreat being made by the NSE 20 index. What are you making of current market performance?
Well, interestingly, this is happening precariously close to the election. I mean, that's only 6 days away. So I think this is more a shift of focus. I don't think we did expect to see this sort of correction happening much earlier than this. I think the postponement from December to March threw us off, and then again now we've had very strong foreign demand, equally vibrant local activity on the market, which indicates that there is a level of confidence that we are not expecting a repeat of 2007, 2008 election, post-election issues. We have seen most of the leaders coming up and saying that they are ready to accept defeat, and we have also seen that our Independent Electoral Commission has taken very many steps to make sure that this doesn't happen again. The institutions are in place. So I think what we are really looking at, and right now what we are seeing, is that a lot of investors have just taken a wait-and-see position, which I think we are going to see begin to unfold come Tuesday, and once we see how the elections are going, and then we will be able to actually gauge what direction the market will take after that. Of course, a peaceful election will definitely mean that we can see a return to the bullish trends, and of course any issues might cause a level of stagnation and probably more of a drop.
With that being the broad sentiment, Samuel, it's in this context that we've had quite a bit of company news coming through. Kenya Power, as I mentioned earlier, dropping yesterday close enough to 3% as investors await clarity over the proposed electricity tariffs that the company has suggested. What's the proposal that's actually being put on the table here?
Well, the government has accepted the tariff increase. I think this is more because Kenya Power has various plans, especially to change our overhead cable network to now become an underground cable network, for which they have actually received some funds, I saw in the news yesterday. And I also think that because of the increased distribution networks, and they still need quite a bit of investment in infrastructure, and that it is definitely intended to sort of fund this. So I think that that tariff structure is one side of the coin, because I do think that the revenues, there is also a feeling on the market. I heard somewhere yesterday an investor saying that they were expecting KPLC to report a reduction in revenues, and I think that is also something that the market is factoring in, and therefore it might not just be the fact that the tariffs are going up, but also that expectation of a reduction in revenues that might be affecting the stock.
Certainly for shareholders, the concern has been that the company's profit margins had shrunk after cost has risen over the years. While electricity tariffs remain steady, of course, implications at this stage of the game is that we've got investors happy that, we're seeing some revision being made by Kenya Power to actually deal with its revenue base. But let's take a look at the broader implications when it comes to doing business in the country and the cost that's associated with that, Samuel, because Uchumi Supermarkets yesterday showing that its profit, for example, tumbled over 35% in the first half ended December and hit significantly by those higher operating costs. We had operating expenses jumping 18%.
Yeah, well, Uchumi is on an expansion mode, so that must be taken into consideration, and this will definitely hit their books going forward. And we have started to see the costs being reflected, because expansion can be a very expensive issue. They're building 2 new branches, I think, and that means that we do expect that the increase in costs is a reflection of this expansion mode. I know that they did also say that imports and certain other issues were causing the costs to increase, but I do think that the main component was coming from the fact that they're expanding, they're spending more on that, and that of course is naturally expected to begin to bring back some revenues going forward, maybe once the expansion is in place. That said, I'm still quite strong on Uchumi. I still think they have a very strong patronization locally, and that is giving them very strong demand. I was looking at the demand and supply numbers, and the demand is very strong, despite the fact that it's at a slightly lower price. A lot of investors are looking to get into Uchumi, and that means that the stock is still being viewed positively going forward, which I think is going to help the price to hold up.
Of course, East African Portland Cement is another company, Samuel, that is pursuing its expansion drive pretty aggressively, but it's a company that's also managed to get quite a handle on its cost structures, and we saw that company returning to a profit during the 6 months ended December. What's your view on East African Portland Cement, the stride it's making in terms of, as I said, managing that cost base, but also the strategy it has in mind with regards to expansion?
Well, the permanent secretary was quite clear that they have resolved most of the issues that actually caused the company to go out of operations for a certain period last year, and I think those boardroom issues were really affecting the company. And then again, we have started to see East Africa Portland begin to they say they're going to build a network of depots across the country, which is another good thing. What I haven't seen yet, and I'm hoping to see going forward, is that they still have that yen loan, which is still exposing them to exchange rate risks, which I think they need to hedge, or they had intended or had shown intention to hedge on, and we haven't seen much on that end. And I think that that is a very important component that might affect them going forward if we do see a weakening of the shilling. But as long as the shilling remains stable, they are doing fine. We did see their foreign exchange earnings also shooting up, doubling actually, from up to 174 million from about 70 or 65 million or something like that. And that means that a lot is working for them. And I've actually been quite positive on buying that stock, because the reason being, most of the issues that were affecting operations last year were not fundamentally, they were not operational, they were more to do with the boardroom wrangles, and therefore I expect the share price, once the company goes back into profit, which it has, and as they head towards the year end, to start heading back towards where it was in the 60s going forward.
Of course, we've had the company paying a dividend to shareholders for the first time since 2010. How much more incentive has that put on the table for you, Samuel?
Well, normally with Kenyan investors, it is very, very important to see a dividend. Of course, the Ministry of Finance or the Treasury will be smiling, at least they're getting something into their pocket, and of course Lafarge, who are also a major shareholder. But also the retail investor in Kenya has a tendency to be very dividend driven, and that means that we could see a renewed interest in that stock. We saw that with National Bank of Kenya when they started paying dividends after a long pause, and so I do expect to see some strong some strong reaction to that. And the thing is, right now, East Africa Portland has been fairly illiquid in comparison to its peers in the cement sector. And so I think that that is also an issue that if they see liquidity coming onto that particular stock, then we would expect to see the price shift upwards, and we should see a strong support for that.